Let's start with a mental image. I think everyone listening has probably had this daydream at least once.
Hmm.
You're standing on a terrace, it's warm, there's a nice breeze, you got a cold drink in your hand, and you're looking out at the Andaman Sea, that impossible turquoise color.
The dream. It's why people grind away in those 60-hour work weeks to get to that terrace.
Exactly. But we aren't here to talk about the dream today. We're here to talk about, well, the morning after the dream.
Right. What happens when paradise decides to throw a curveball?
A curveball or maybe a punch to the wallet. We're doing a deep dive into the surprisingly complex world of property insurance in Phuket.
And I know what people are thinking. Insurance. It sounds incredibly boring.
It does. But look, when you're holding an asset worth 20, 30, maybe 50 million metal in a foreign country, this is not just paperwork. This is survival.
It's risk management. And if you get it wrong, that dream villa becomes a nightmare liability faster than you can blink.
So, to get this right, we are not just guessing. We're leaning really heavily on a stack of insights from Ocean Worldwide.
And that's a key point.
It is, because I want to flag this up front. Ocean Worldwide isn't some new app that popped up last week. They have been a staple on the Phuket real estate scene since 2004.
Which is crucial. I mean, think about what's happened in Phuket since 2004. They've seen the tsunami, major floods, political shifts. They have the historical data.
Exactly. And we're looking specifically at the expertise of Sandra O'Neill, the director there. The source material said she's helped literally thousands of families and investors navigate this market.
So when they talk about a leaky roof or a break-in, it's not theory. It's based on, what, 20 years of actual events?
Right. The only kind of data that really counts. So the mission today is to figure out how to stop your tropical paradise from becoming a financial black hole.
And the first step, according to the source, is that you have to unlearn all your Western assumptions about weather.
What does that mean?
Well, most investors come from places like Europe or North America. We think rain is just rain. A storm is just a bit of wind. In Phuket, you have to respect the physics of the tropics.
Okay, so the source material calls this the why. Why do our standard insurance assumptions just fail here?
It starts with the monsoon season, so roughly May to October. But don't just think rain, think about volume. The infrastructure, the drainage, the canals, it often just cannot handle the sheer amount of water that can fall in, say, a 20-minute window.
So it's not just about your roof leaking, it's the ground itself. It can't swallow the water fast enough.
Precisely. You could be on a hill, but if the drainage gets blocked by leaves or debris, which happens all the time, you've got a flash flood. We're not talking about a puddle. We're talking about water backing up into your living room.
Destroying electricals, warping the floors.
Limiting everything. And then the mold follows within hours. And you have to add the wind to that. Tropical storms can generate gusts that don't just rattle windows, they rip tiles off roofs.
Okay, aggressive weather, I get it. But there was something in the notes that, I'll be honest, I thought was a typo. Earthquakes.
I know.
I mean, really. In Phuket.
It sounds like an insurance company trying to upsell you, doesn't it?
It really does.
Yeah.
I don't associate Thailand with seismic activity. Japan? Yes. California? Yes. Is this a real risk?
It's a fair question. Look, Phuket isn't sitting on the Ring of Fire like Tokyo, but the region is seismically active. You can feel tremors from quakes in Sumatra.
But has it actually caused damage?
It has. Structural cracks. It's rare, let's be clear. But Sandra and her team at Ocean Worldwide use a really good analogy. They compare it to a seatbelt.
Go on.
You might drive your car 10,000 times and never need that seatbelt to lock up, but for that one time, you're in a crash. It's the only thing that matters.
And it's probably a cheap add-on.
It's very inexpensive.
Nice.
So it's a classic, low-probability, extreme consequence decision. If you don't have it and a tremor cracks your foundation, that's a total loss.
Okay, sold. Let's talk about the human element. Because paradise attracts tourists, and tourists attract, well, crime.
Right. Let's be honest about what a holiday home is. It's a warehouse full of expensive stuff that sits empty for months at a time.
It's a sitting duck.
It is. Burglary and vandalism are real risks.
But wait, I've seen these villas. They have walls, gates, CCTV systems that look like they belong at the Pentagon. Isn't that enough?
It's a deterrent, not a force field. Ocean Worldwide makes a very sharp point here. What happens when the power goes out?
Cameras go dark.
And the electronic gates might unlock, or what if someone just climbs the wall? Security systems fail. Insurance is what they call the final safety net.
Okay, so the environment is hostile, the ground might shake, people might rob us. I'm feeling stressed. Let's talk solutions.
The solution is proper coverage. But this is where people really mess up. They just think, oh, insurance is insurance.
The bought house insurance, I'm good.
And that is the sentence that precedes a financial disaster. You have to understand the difference between building and contents insurance.
Sandra's team has this great visualization for this, the upside down rule.
Yeah.
It made it click for me immediately.
It's the best way to explain it. Okay, so imagine you're a giant. You reach down, you grab your villa, you turn it upside down, and you shake it really hard.
Everything that falls out is contents.
Correct. The sofa, the TVs, your clothes, the artwork, the forks and knives. If gravity takes it, it's contents.
What stays stuck is building.
Right. The roof, the walls, the floors. But, and here's the catch, it also includes the fitted kitchen cabinets, the built-in wardrobes, the bathroom vanity. If it's screwed into the structure, it's part of building.
Why does that matter so much? Why not just one blanket policy?
Because a disaster rarely hits everything equally. Let's go back to that storm.
Yeah.
The wind rips off the roof. That's a building claim.
Okay.
But because the roof is gone, rain pours in and ruins your expensive sofa and your Persian rug. That's a contents claim.
So if I cheaped out and only bought building insurance,
Then the insurer fixes the roof, and you're left sitting in an empty wet room. And in Phuket, a lot of these luxury villas are sold fully furnished. The furniture package alone could be millions of baht.
that's a huge financial gap. You need both. Okay, let's pivot to the investors listening. The people renting these places out. That changes the game, right?
Completely. Ocean Worldwide calls this the secret business. You have to stop thinking of it as your home and start thinking of it as a commercial operation. And there's a huge warning here.
What's that?
You must tell the insurer it's a rental.
Why? Do they just charge you more?
It's about the risk profile. If you say, I live here, they assume an owner who cares for the place. If you're putting in different tourists every week who might not care if they leave a window open in a storm.
The risk shoots up.
Exactly. And if you have a claim, say a fire, and the investigator finds booking receipts from tenants you never declared, they can void the policy.
Void it, as in cancel it.
Completely. They keep all your premiums and pay you nothing because you misrepresented the risk.
That is a true nightmare scenario. Okay, so rule number 1, don't lie. But what about the tenant risks themselves? Like red wine on the white sofa.
That's accidental damage, and yeah, it happens. But you also have to think about malicious damage. Tenants getting into a fight and putting a fist through a wall.
Does insurance cover that?
Only if you have a specific add-on for it. The source estimates it's cheap, maybe 2,000 to 5,000 baht a year. But there's an even bigger risk with tenants.
What's that?
Liability. The classic slip and fall.
Ah, right.
This is something foreign investors often underestimate. They think, oh, it's Thailand, people don't sue. That is changing fast, especially when they see a foreign owner they think has deep pockets.
So a guest slips by the pool, hits their head.
They're not just going to ask you to pay the hospital bill. They might sue you for negligence. The tiles were slippery. The railing was loose. Public liability coverage pays for their medical bills. And, just as importantly, your legal defense costs.
What does something like that cost?
Again, it's surprisingly low. Maybe $5,000 to $10,000 a year for millions in coverage. It's the cheapest lawyer you'll ever hire.
There was one more add-on for investors in the source material that I thought was genius. Loss of rental income.
Yes. This is for the serious investor. Let's say that flood happens. The villa is uninhabitable for 4 months while it's being repaired.
So my booking calendar is empty. I'm losing all that cash flow.
But your costs don't stop, right? You still have to pay for the pool guy, common area fees, internet. This coverage steps in and pays you the rent you would have earned. It protects your cash flow.
It transforms insurance from just fixing the building to saving the business.
It protects your entire ROI.
Okay, we know what we need. Building, contents, liability, income. How do we buy it? Because navigating Thai bureaucracy sounds, not fun.
It's not. And the advice from Ocean Worldwide is very, very clear on this. Do not do it yourself.
Why not? I can buy anything online now?
You can, but should you? The policies are legal contracts written in Thai. The English translations are often just summaries. If you misunderstand the legal definition of flood, you might be paying for a policy that gives you zero protection.
So get a broker.
Get a broker. And not just to buy the policy. The real value is when disaster actually strikes.
How so?
Okay, picture it. It's 3 a.m. A pipe has burst. You're in London. Your villa's in Phuket. Do you want to be trying to explain plumbing to a Thai call center operator?
Absolutely not.
That's what the broker does. You call them. One call. They handle everything else. They speak the language. They know the process. They fight for you. They're your advocate.
That makes them sound less like a middleman and more like a bodyguard.
That's a great way to put it. And they can often find better deals anyway because they know all the niche products out there.
Speaking of deals, are there ways to lower the cost?
For sure. Bundling is the easy one. Put your house and car with the same company. But the biggest lever you can pull is the deductible.
That's the amount I pay first before the insurance kicks in.
Right. If you agree to a higher deductible, say $20,000, but instead of $5,000, you can lower your annual premium by up to 20%.
Because you're telling them you'll handle the small stuff yourself.
Exactly. Don't bother me with a broken window. I'll only call if the roof blows off. Insurers love that. But the big caveat is you must actually have that 20,000 baht ready to go.
Right. Don't set a deductible you can't afford. Now for the scary part. The fine print. The gotchas. What isn't covered?
The devil in the details. The biggest one is the idea of sudden versus gradual damage.
Okay, break that down.
Insurance covers sudden accidental events. A pipe bursts at 2 p.m., floods the house. That's sudden. You're covered. But let's say a pipe has a tiny, slow leak inside a wall for 6 months. The wood rots, mold spreads, the wall finally gives way.
Is that covered?
Almost never. That's gradual damage. The insurer argues that it's a maintenance issue, that you should have caught it earlier.
That feels a little harsh.
It is, but it's standard. The same thing applies to the biggest tropical killer, termites.
Oh, I've heard the horror stories.
They can destroy a home, but insurance does not cover pest damage, period. That's on you. You need a separate pest control contract.
And one last trap from the source. Under-insuring.
The Goldilocks problem. People get clever. They say, my villa costs $10 million to rebuild, but I'll insure it for $5 to save on the premium.
The logic being they'll probably never have a total loss.
It's a terrible, terrible gamble because of something called the average clause. If you are 50% underinsured, the insurer can choose to only pay 50% of any claim, even a small one.
Oh, wow. I did not know that.
And if the house does burn down, you only get $5 million. You literally cannot afford to rebuild your own home. You're left with a plot of land and a pile of ash.
So get a professional valuation. Don't guess.
Absolutely.
This brings us to the final piece of the puzzle. We've talked about insurance paying when things go wrong, but the real goal is to stop them from going wrong in the first place.
And that's where property management comes in. Sandra O'Neill at Ocean Worldwide puts it perfectly. Insurance is reactive. Property management is proactive.
They work in synergy.
They have to. Remember that gradual damage exclusion, the slow leak?
Yeah.
A good property manager is the one who spots that tiny damp patch on the wall before it rots the whole structure. They are your eyes on the ground, checking things after a storm, looking for problems.
So the manager keeps the insurance valid by preventing the things that insurance won't cover.
Precisely. If you're an absentee owner, you can't do that from London. You need someone there.
So, zooming out. Monsoons, earthquakes, liability, brokers. What is the single biggest takeaway here?
The takeaway is that owning property in Phuket is a business, and insurance lets you outsource the anxiety.
Outsourcing the anxiety. I love that.
It's what lets you actually enjoy that cocktail on the terrace. Because you know that if the worst happens, if the storm hits, if a guest slips, you are not going to be financially ruined. You have paid a professional to take on that risk for you.
And here's a thought to leave everyone with. We spend months, maybe years, obsessing over the purchase price of a property. But how often do we actually calculate the cost of losing it?
Or the cost of losing the income from it.
Right. Is your passive income actually protected? Or is it one bad monsoon away from disappearing for 6 months? If you haven't looked at your policy for loss of rental income or public liability, you might be holding a much more fragile asset than you think.
It's definitely worth pulling that policy out of the drawer and taking a look.
Absolutely. And listen, if this all sounds overwhelming, if you want expertise that comes from over 2 decades of experience in the Phuket market, you need to go to the source.
Ocean Worldwide.
Sandra O'Neill and her team have been guiding investors since 2004. They aren't just selling villas. They're in the business of helping you keep them safe.
They've seen it all.
You can find them at oceanwwp.com. That's oceanwwp.com. Go check them out and make sure your piece of paradise is actually protected.
Do it before the next rainy season starts.
Very good advice. Thanks for listening to this deep dive. Stay safe, and we'll catch you on the next one.